Hello, it's Adil bringing you a review from an intermarket analysis perspective of the FTSE 100. Obviously, weekend analysis for week starting the 19th of May 2014. Okay, folks, so it's been a while since I did the last video. Unfortunately, I've had my mother-in-law pass away, my mentor, my spiritual master pass away, so it's been pretty tough, to be honest with you. Just dealing with that. I've been very busy with family, obviously consoling my wife and consoling myself, really, to be honest. It's been quite hard. But life goes on, and their teachings live on, their character lives on, and we always remember the fallen. So life goes on, folks. Life goes on. Okay, so let's let's focus on analysis and trading, and really especially with regards to my trading mentor. He always taught me to remain steadfast, remain focused, remain calm, and always work hard work, dedication. So that's basically what I'll continue to do, and keep his teachings within me, and hopefully pass that on to everybody else as well. And really, it's all about hard work and dedication, and remaining committed, and remaining steadfast as well, especially when it comes to trading, with regards to being calm, collective, very important. And just have faith in your trading strategy, your trading plan. Obviously do your homework, so hard work and dedication towards that. And as they always say in trading, I mean, you plan your trade and trade your plan. So, and that's basically what we're going to do. So with regards to the FTSE 100, okay, so fundamentals, what's the fundamental backdrop? Fundamental backdrop really can be summed up in two potential paragraphs. Markets were initially buoyed early on by hopes that central banks would continue their stimulus measures to support the global economy for the foreseeable future. Obviously, we all love the Kool-Aid with regards to the ECB. And obviously from the US as well, and given the fact that Mr. Carney was talking down interest rates, with the European Central Bank expected to act to combat low inflation, as we know, low inflation, low GDP this week, with the exception of Germany. The periphery is suffering, so there's been talk with regards to the Bundesbank easing off its obviously is hawkish stance, and embracing QE and a potential rate cut as well. So, and adding the fact that we had the Bank of England Governor Mark Carney ruling out an early UK interest rate rise. Again, he was dovish, so potentially dovish. Or the only bank that obviously was slightly hawkish was, you could argue, would be the US and Japan. But even then, given the fact that we had some weaker data out of the US, that certainly puts that into question as well. But signs of economic weakness, notably disappointing Eurozone growth figures and weak US retail sales and consumer confidence data, took some of the shine off shares. The continuing tensions in Ukraine, as we know, geopolitics plays a big key with regards to trading, with further talk of Russia switching off gas supplies, also unsettled investors. And as we know, especially with regards to European markets, they are very vulnerable to any potential geopolitical events, especially from Russia and Ukraine. And obviously that can cause a slump in the markets now, especially with regards to Germany, because it exports so much to Russia. So interesting, folks. Adding the fact that we also had start of the week, we had weaker Chinese data as well, so that obviously didn't help things with regards to the market. So, but having said that, given the fact that we had certain central banks, especially the ECB, obviously dangling out the QE carrot, that kept stock markets afloat, and obviously we had a short squeeze going into Friday's close as well. Okay, so it'll be interesting to see what happens next week. Obviously, the focus now, given the fact that we've got the one dilemma of the Kool-Aid factor in the background, okay, and then obviously that's versus reality, such as economic weakness, okay, and geopolitical tension. So these are things that we'll have to weigh on a daily basis and see exactly how the market interprets and understands it from that perspective. Okay, so let's go to the daily chart of the FTSE. Let's see if we can try and decipher exactly what's going to happen in the levels in the coming week. Okay, so Monday onwards, we have on the daily chart, we have a bearish engulfing candle, which isn't a good sign from a technical perspective. We have a bearish basically inside bar on a Friday, and in reality, it's the bears are still in control. Okay, the bears will remain in control until the upper body is taken out around the 6880, and then obviously I'll switch my bias. Until then, I remain a bear going into Monday's trading. Okay, so inside bar on a daily chart. on the FTSE 100. Let's have a look at the FTSE 250, see if we can gauge any understanding from there. H&S formation has been triggered on the daily chart. The FTSE 250 exceptionally weak. We've got a downside target of around 16,300. Let me just get this right 1 second. 16. The head here is 16.7 or 16.7. The get this right. Sorry, folks. Let me just get this adjusted. Okay, let me just increase this so you can actually see this. Okay, so we've got 16,700 minus 15,500. So we're looking at 14,300 on the downside. Okay, so that's basically what we're looking at on the downside. So keep an eye on that. 14,300 puts. So obviously we breached the 200 MA. The H&S formation has been triggered. We've broken this key trend line that's been held for quite some time, and obviously down we go. So it's not looking good for the FTSE 250. Now, I mean, it's a conundrum really, because if Mr. Carney is obviously talking down rates, then it should certainly be dovish in terms of monetary policy going forward, and that should certainly be helping the FTSE 250, but it isn't. So obviously the market doesn't believe in Mr. Carney's forward guidance and expects rates to rise, and more than likely front running that by obviously the H&S formation that's been triggered in the FTSE 250. So again, we'll have to see with regards to FTSE 250. I'll try and give more of an insight with regards to US markets. See if we can pick up any clues from there with regards to why the FTSE 250 is so weak. FTSE 350 itself, obviously bearish engulfing candle, horizontal resistance is held. Obviously, we did have quite a substantial sell-off before we closed higher. Potential bottoming tail there. Again, still remains weak. Okay, so the bears still remain in control on the FTSE 350. Okay, so overall, bias there is bearish. So let's have a look at the US market. US markets, what can you see? And this is why the FTSE 250 potentially is front-running the H&S formation, because there's a pending H&S formation here on the S&P 500. We had the breakout. Obviously, everybody bought that, sold. Okay, people have been burnt. Loss of faith in the breakout. Now, right shoulder, and down we go. H&S formation looking for potential gap fill at 1842. So if we take out a 1900, take it to the actual neckline here around the 1960. And the high is 1900, so you're looking at 40 points in the downside, and from 1960, so you're looking at 1920, so you're looking at 1820. So that's basically what you're looking at on the downside, and obviously the gap fill level is around the 1840 level. So again, debatable, but we'll see exactly how that plays out. Given the fact that the FTSE 250 already has a H&S formation that's been triggered, then certainly S&P 500 certainly becomes vulnerable to the downside as well. The Dow Jones, exactly the same pattern like I've explained on the S&P 500. We had the breakout, which was a freakout. The market, obviously everybody who's bought on that breakout there has obviously got their fingers burnt. Now looking for inside bar, looking for a right shoulder, bang, down we go. And this key trend line, well, not key trend line, but basically two touches of trend line here, and this certainly becomes vulnerable. Okay, so certainly keep an eye out for that. Let's have a look at the FTSE, the Dow Transportation. That's the only index that's actually quite strong. But again, this could be setting up for a potential H&S formation. So we shall see. We shall see. Even with oil remaining aloft as well, the Dow Transports have been moving higher impressively. So again, that's something that we certainly keep an eye out for and see exactly what happens with regards to that. Let's have a look at the daily chart here. Daily chart, inverted head and shoulders. So again, this is something I'm going to keep an eye out for, although I don't like the left shoulder, but the pattern certainly is there. The fact that we've got a higher low as opposed to a lower high. So that's all certainly factors into the equation. So provided the Dow and obviously the S&P create this H&S formation, and we have a failed inverted head and shoulders, and then this H&S plays out here. So overall, what's it looking like? We're going down. Okay, so at present. But having said that, you've got the ECB, etc, etc, etc. So there's a lot of factors at play. So for now, I'd like to stay neutral going in for the remainder of the week with regards to the markets, other than the FTSE 250, FTSE 100. That certainly will remain under pressure. But even then, from a fundamental perspective, given the fact that Mr. Carney is remaining dovish and talking down interest rates, then that obviously is conducive to growth. So from a fundamental perspective, yep, you can certainly go higher from the ECB. Obviously, if they're doing the Kool-Aid and unleashing QE, again, fundamental factor go higher. Technicals is saying lower. So it's a tricky one. Okay, it's a tricky one. Okay, so let's have a look at the small time frames now. Okay, let's have a look at this. Okay, so let's go to the FTSE 100. Okay, let's have a look at the small time frame. So 10-minute chart at the moment, your base is going to be 6820. Okay, so that'll be your potential support going into next week. So I will be going short from the outset on Monday and looking for potential 6820 on the downside, and we may well be going sideways here until we get confirmation from the ECB. Any news from the ECB of rejecting QE and talking QE down, talking interest rates cuts down, then bang, down we go with ferocity. Okay, so keep an eye out for that. Okay, so that's a 10-minute chart. Your resistance in the interim is 6860. That'll be a level I'll be shorting straight from the outset from Monday, and your downside target is going to be 6820. Okay, from that's all I can gather from there. Let's have a look at a 60-minute chart. 60-minute chart, as you can see clearly, it's a H&S formation, so this certainly doesn't look good. We're back in the 50% for the right shoulder. You're looking at the head, which is at 6900, looking at neckline, which is around the 6820. So that gives you a potential 80-point drop on the downside. So you're looking at around a 6740. 6740 is around your 200 MA. So that's basically the pattern that I'm looking at playing out going into next week. So more than likely in the fundamental analysis service I'll be organising a swing short. This certainly isn't looking good for the FTSE, and looking to the downside come Monday. Having said that, given the fact that Mr. Carney has kept interest rates low, any news from regards to the ECB about QE and bazookas, etc., and interest rate cuts, etc., this market certainly flies and back up to 6,900 again. Okay, so I just take it every day as it comes. I mean, if China is certainly buoyant overnight, and any talks of a potential rate cut or more stimulus there, that pushes up China. Japan, talk of QE there, pushes up Japan or Nikkei. Then obviously this whole H&S formation will fail. The right shoulder will be negated, and we have a powerful short squeeze up to 7,000 and higher. So very, very interesting scenario. Again, we allow the market to dictate, and I'm just going to adjust accordingly. Obviously, I keep an eye on risk effects. I keep an eye on commodities, keep an eye on bonds, and see if they get firing off any warning shots as well. Okay, folks, so I think I've wrapped it up there. Risk on, risk off, wax on, wax off. Goodbye now.